Welcome to Iraqi Dinar Update, your go-to source for the latest news, expert insights, and real-time developments on Iraq's currency, economy, and financial reforms. Whether you're a long-time investor or just curious about the dinar, you're in the right place. When discussing the future of the Iraqi dinar, there's a frequent debate among currency watchers about what constitutes a reinstatement, RI, versus a revaluation, RV. These two terms, though often used interchangeably in casual conversations, actually refer to very different monetary policy actions. Understanding their meanings requires looking into historical context, the international monetary framework, and how countries manage their exchange rates. A reinstatement, or RI, refers to restoring a country's currency to a previous value or rate that it once held on the global stage. This is typically based on a known, previously established, and officially recognized rate that existed before a political or economic disruption caused that currency to lose international standing. In the case of Iraq, many who follow the trajectory of the Iraqi dinar closely believe that the country once had a significantly stronger currency, and that the current rate does not reflect its real economic potential, nor its historical standard. In contrast, a revaluation, or RV, is when a country deliberately changes the value of its currency upward from its current official exchange rate. This is done through policy, often triggered by significant improvements in economic conditions, balance of trade, inflation control, or reserves. An RV does not aim to bring the currency back to a previous historical rate necessarily. It aims to set a new, higher rate based on updated economic realities. So, let's apply this to a hypothetical. Imagine Iraq announces a new exchange rate for the dinar. If the Central Bank of Iraq declares that the dinar is now worth $1, a one-to-one exchange, many people would react with frustration or disappointment. Why? Because they would argue that such a value does not represent the full potential or history of the dinar. It could be seen as a weak or cautious move, perhaps more symbolic than economically powerful. Those who believe in a strong dinar view such a rate as underwhelming. It does not send a strong message to international investors. It may help restore confidence among the domestic population, and it may indeed mark a shift toward modernization, but it doesn't yet harness the full value some believe the dinar could carry. In this sense, a one-to-one rate might seem stupid to those who expect the rate to be restored to its former international strength. This could be due to Iraq's large reserves of oil, ongoing reforms in governance, efforts toward digital banking, and reintegration into global finance. Supporters of the dinar believe the fundamentals support a much higher valuation. Now, consider a different scenario. What if the dinar is restored at a rate of $3.22 per dinar? This is a number that gets thrown around often in dinar circles because it is widely believed to be close to the rate that the Iraqi dinar traded at before the Gulf War and the subsequent imposition of sanctions, currency devaluation, and economic isolation. If Iraq returns to this rate, many would call that a reinstatement. That's because it aligns with a previously documented rate and thus suggests Iraq is returning to its prior monetary standing. In essence, this would be Iraq reclaiming its place and dignity on the global economic stage, reflecting both historical precedent and a reassertion of sovereignty. But then there's a subtle twist in the logic. What if Iraq returns with a rate slightly higher than its previous $3.22? Let's say the Central Bank of Iraq announces that the dinar will now be worth $3.23. At first glance, this might seem like a trivial increase, just 1 cent more. But this small numerical detail has large implications for how that policy move is categorized. By moving beyond the exact previous rate, even if by a tiny margin, Iraq would not just be restoring an old value, it would be establishing a new one. This is no longer a reinstatement to the historical standard, it's an increase beyond that standard. This would technically qualify as a revaluation. A reinstatement could be appealing because it's politically safe. It doesn't invite as much scrutiny because it can be defended as a historical correction. Many international financial institutions, including the IMF, World Bank, and BIS, might support it as a restoration of monetary order. It could signal to the international community that Iraq is back in alignment with global norms. It would also give the Iraqi people a sense of national pride, without appearing overly aggressive. On the other hand, if Iraq revalues the dinar beyond its historical rate, even by 1 cent, it signals a bold new direction. It tells the world that Iraq is not merely returning to its old self, but moving forward into a new economic reality. This could attract investment, instill long-term confidence in the dinar, and make Iraq's financial system more attractive to international banks and trade partners. But here's where it gets even more interesting. For decades, Iraq has been working through structural reforms, financial modernization, and the rebuilding of trust with institutions such as the IMF, World Bank, and U.S. Treasury. It has introduced digital platforms, linked itself with international payment systems, and improved its foreign reserve position. The Central Bank of Iraq has repeatedly emphasized that it is committed to price stability and integration into the international financial system. All of these factors support the view that the country might not settle for merely returning to an old rate, but could use that rate as a baseline and go slightly higher, as a symbolic step forward. This leads us back to the earlier hypothetical. If Iraq returns with a rate of $3.22, people will likely celebrate it as a reinstatement because it matches the commonly accepted historical rate. If Iraq comes out at $3.23, however, that extra penny becomes more than just a cent. It becomes a statement. It signals that Iraq is not just looking back but moving ahead. It's a strategic assertion of national value and strength. Technically, it transforms the entire act into a revaluation. And it's important to remember that these terms, reinstatement and revaluation, don't just apply to what the rate is, but how the international community perceives the move. Central banks, institutional investors, and foreign governments will take note of the language used. If Iraq and its central bank say they are reinstating the dinar, they are anchoring their move in historical legitimacy. If they say they are revaluing, they are stepping into the future with a new monetary identity. In short, the question of whether a new exchange rate is an RI or RV is not just about numbers, it's about history, perception, policy, and strategy. $1 per dinar might be symbolic, but unambitious to many. A return to $3.22 feels like justice to those who see the dinar as artificially suppressed. And $3.23. That might be the most telling number of all, a tiny increment that transforms a reinstatement into a revaluation and a return into a rebirth. Thanks for tuning into Iraqi Dinar Update. If you found this content helpful, be sure to like, subscribe, and hit the notification bell so you never miss a beat on Iraq's evolving financial landscape. Stay informed and stay ready.